Hi everybody, this is Damon King with Chapelwood Financial Services. Another casual Friday feature for you today. As you can see, I'm only semi-casual. I dressed up just for you. But here's what's going on today. We've just recently had a lot of client strategy reviews, and one of the comments we've been hearing more probably than anything else is my itemized deductions on my tax return aren't going nearly as far as they used to. What gives? Well, what gives is that, remember, with tax reform that was signed into law at the end of 2017, the standard deduction was doubled. As a result, it's going to be less likely that you're going to be able to itemize deductions, things like your mortgage interest, your property taxes, maybe even your medical expenses, and your charitable contributions. However, there are still some things you can do this year that are not itemized deductions and that could allow you to reduce your tax bill for 2019. There's not a lot we can do to help you for 2018, but we're going to talk about 3 strategies you can use for 2019. So here they are. Number 1, you can give stock to charity. Oftentimes, you probably just write a check to your church, your university, your favorite charity, and that's great. But that deduction is an itemized deduction. It won't help you as much. However, you can gift appreciated stock that has risen in value. Because if it's in a taxable account, you pay taxes on this and you get a 1099 every year for capital gains and dividends. If you were going to sell that stock and you got a gain, you would pay a tax on that. However, if you gift that stock that has increased in value to the charity gets the benefit of it. You do get a tax deduction for the value of the stock, but more importantly, you avoid the capital gains taxes that you ordinarily would have if you just sold it inside of your taxable account. Strategy number 2, you can donate your required minimum distributions. This is if you are at least 70 and a half or older, and you're taking your required distributions from your tax-deferred accounts like IRAs, 401ks, that sort of thing. You can actually donate up to $100,000 of your required distributions directly to charity. If you do that, it does 2 things. It counts as your required distribution, and you don't have to count it as taxable income in this year. So that's another great strategy. And finally, another strategy that's relatively new is called a QLAC, or a Qualified Longevity Annuity Contract. Essentially, what this allows you to do is to set aside up to $135,000 in tax-deferred money in a separate account, a Qualified Longevity Annuity, and you can defer taxes on that amount all the way out to age 85. So instead of having to take those required distributions starting at 70 and a half, you can defer the taxes on up to $135,000 in tax-deferred money for an additional 15 years. So that's a really big savings. That's money that you don't have to take, and it's sitting out there waiting for you when you're older. So these are just 3 strategies for reducing your tax bill in 2019 that don't require you to itemize. And I encourage you to use these strategies and look into other strategies. As always, you can give us a call at Chapelwood Financial, 348-0909. Give Shelly a call. She'll conduct a 30-minute second look for you, and we'll get on the phone and see how we might be able to help you. Thanks so much for watching. And here's Reno. He's come to say hi too. So give us a call at Chapelwood Financial. Can't wait to help you. Have a great weekend.